Welcome back to the Macro Gamer channel. My name is Mark Cassingham. Today we're going into our weekly numbers for our Shield portfolio. This is week number 60 as of today, September 13th, 2025. So 60 weeks we've been doing this, going strong. So let's get into it. So this is our Weapons of Finance. This is the Shield part of our strategy. This is our primary portfolio. This is a defensive strategy. It's focused on preserving and protecting wealth, continuous and stable returns, utilizing balanced diversification for global economic resilience and dynamic management. So as things change, we change the portfolio. All right. So this is the high level view of how we run this thing. So here's our portfolio's net worth. Currently at $765.03. And this is as of week number 60. As of week number 60. So $765.03. We have a market gain of $91.90. And a total return of positive 24.79%. This is our money weighted return. So 24.79%. This is all-time information right here. So here we have our weekly data for week 60. We have a market gain, a total gain of $9.31. And we have a money weighted return of positive 1.23%. So this is our weekly data, so the past 7 days. Then we have our monthly data for week number 60, so this is the past 30 days. We have a total gain of $36.68. And we have a money weighted return of positive 5.13%. So this is the past 30 days as of week 60. And we have our quarterly data for week 60. So this is the past 90 days. So we have a total gain of $42.01. And we have a money weighted return of positive 6.30% for the past 90 days. This is our performance. Then we have our yearly data for week number 60. So this is the past 365 days. This goes all the way back to September 12, 2024 till today. So we have a total gain of $89.61 over that time period. And we have a money weighted return of positive 21.58%. It's our yearly data. So we're above 20%. So I said this before on the yearly data, operationally, meaning average performance, we would be between 5 and 10%. Optimal performance is greater than 10%. And right now we're above 20%, so that's stupendous performance. It shouldn't be this high. We're going to correct at some point. Gold has mainly been the driver of this because we're the most dominant asset in our portfolio, but at some point this is going to correct. It shouldn't be this high. Above 10 is great, but it shouldn't be above 20. It's too high, so we need a correction. Correction is definitely coming. Then we have our all-time data for week 60. So this goes all the way back to portfolio inception, July 19th, 2024. So we have a total gain of $91.90 over that time with a money weighted return of 24.79%. So that's of all-time data for week 60. 60 weeks. I've been doing this portfolio 60 weeks. It's crazy to me. All right. Now we have our weekly percentages. So on the right, we have our target weighting. So at the top, we have 45% allocated to gold with our GLD ETF. We have 15% allocated to bonds with our GOVI ETF. We have 15% allocated to commodities with our USCI ETF. We have 10% allocated to stocks with our RSP ETF. We have 10% allocated to US dollar with our UUP ETF. We have 5% allocated to Bitcoin with our IBIT ETF. So these are how our ETFs are laid out. And as you can see, for our weekly return, we have both gold and commodities above 1%. So these are big moves. Bitcoin above 4%. Not terribly different from its normal performance. It's pretty volatile. But gold, again, has been a good week. Past 30 days, really good performance for gold. 8.93% a month. So gold's really running strong right now. Gold. And commodity as well, 4.15%, doing well. So this is the past 30-day percentages, right? Then we have the quarterly percentages. See how the The monthly is 8.93 and the quarterly is 8.37 for gold. Not much has happened over 90 days. All this is more recent. Just this past 30 days for gold has been crazy. But these are our quarterly numbers here. So if you want to look at those. Then we have our yearly performance. So gold at 43% for over 1 year. So doing really good. It's our yearly performance. Here's our numbers. Then all-time performance. So keep in mind, like GOVI and IBIT won't have this all-time performance because we put in these ETFs more recently, especially the bonds one was done this year. But this is the all-time percentages for this. Then we have our position changes. So my last position change was on April 30th. So still no new position changes. So this is part of the dynamic management. I change as I need to change. And then if nothing's going on, then I don't need to change. It's fine. I don't have to make a trade every day, every week, every month even. If things are going good, then things are going good. Let's just leave it alone. Let it ride. All right, we have no portfolio transactions. Then we have our Illuvium staking dashboard. So we have a current ILV price of $15.74. We have a total of 27.09 ILV staked, which gives us a total gain of $426.34. And we have our vesting. So here's all our vestings. Every month we lock up $40 of ILV token and we stake it. So in the future, one day, hopefully if this game takes off, we'll get revenue distribution. So we have 2 stakes unlocked so far. So we could technically withdraw this ILV if we wanted to. This 1.32 or this 0.79 ILV. So over 2 ILV right here, we could withdraw if we wanted to, but we're just gonna leave it in. The next one unlocks in 12 days. So this is the second page of the vesting, and this is the third page. This is the most recent one that we did on August 29th, 2025, where we locked up 2.79 ILV. Then we have a revenue distribution for week 60, which is nothing, 0, nothing as usual. This game's going nowhere. And we have our Illuvium transactions, which no transactions this month. So this week, sorry. So that is our weekly numbers. So now we get into our charts. So we start with gold. Look at this huge spike. This is exactly what I'm talking about. This is all the performance in my portfolio. When gold is at 45% and this is happening right now, my fucking portfolio is doing great. That's why I say it should be correcting. Gold should be pulling back. I don't know how much it's going to pull back, but when it does, I'll be above this 20% over 1 year performance. It'll be still double digits, hopefully. It's going to come down, but we've been in this long ascending uptrend since October of 2023. Then we broke out around Trump's tariff announcements back in April. Then we kind of hit this ascending or this descending red line where we just kept tapping it. That's why I put these arrows. And then it basically broke out once it came right about to this inflection point between this descending red line and this ascending green line, and then it just shot up. So gold is doing great. We have commodities also doing great. We're back above this upper trend channel now. So put these trend channels on there to kind of show you performance, right? So if we go all the way back to can't read. There we go. Thing was clicked. June of 2022, you see where this crazy huge spikes we had. We had this upper trend channel, which was mostly vacant. It really starts over here. Then we have this this lower trend channel where a bunch of it was going through. A lot of the trend was going up. And it broke out beginning of January 2025. This upper trend, and now it's breaking out even higher. So like it's really going up. So gold and commodities, both doing very well. Bonds, on the other hand, very interesting on the bonds chart. Look at this spike right here. Bonds, because the bond yield's been coming down. I think we hit, did we go below 4% on the 10-year? Can't remember. I know we hit 4%. Yeah, look at us. That 5-day. Oh yeah, we barely went below, like 3.99. Like we barely went below it. But the 10-year yield's coming down. Right, so long-term bond yields are coming down, and a lot of bonds in this equal weight ETF are long-term bonds, so it's starting to come up. So we're seeing bonds come up. So that's interesting. Usually you would see inflation coming down, bonds going up. It's not always the case exclusively, but we're just seeing these bonds right now come up while these yields are coming down. And then inflation numbers came out, and they were still going up. So we have our US dollar still going down. This is probably one of the worst markets for the US dollar. It's not doing too good. We have stocks continuing their uptrend. So this is our equal weight ETF. above its all-time high. If you look at the S&P 500, that's well above its previous all-time high. So I marked it right here. So it was like about 61.30. Now we're at 65.88. So we're just keep trucking along on our stocks. I still keep stocks at 10% because it's just highly volatile right now. Then Bitcoin looks like it's having a bit of a turnaround right here. So it's kind of it's coming back at that line. It's at 115. So this multi-year, almost decade-long trend line right here, that's peaked at every fucking bull market top. Because now it's kind of bouncing along it. It's kind of staying, but it's staying below this 120K number. I feel like that's a big psychological number for people. And then it's this ascending line as well for the trend. So as these lines get closer, this red line and blue line, I wonder if it's going to cause something to happen with Bitcoin. It's going to go up or down. Because it's hitting resistance at 120, but it's also kind of getting a little bit of support off this trend line. It's fighting it, and it's kind of resisting it. So we're going to see what happens. But anyway, that is our weekly numbers, our weekly performance for our Shield portfolio. So as always, if you have any questions, comments, or criticisms, let me know. Have a good day.